Let's talk about what our markets did yesterday. Pretty sedate, one would say, very unlike an expiry day. Closed in flat, a little off from the day's highs, but we still managed to hold on to that 22,650 plus print actually on the Nifty futures. 22,545 on the spot. But it's really, all focused towards the globe because what you're seeing in the US right now is a little bit unnerving. We've talked about that if the US markets were to fall further, we may not fall as much. But you've got the Dow, which is knocked off nearly 200 points overnight. You have the S&P knockout almost about 100 points. And the Nasdaq as well crashed about almost 3%, equating to an over 500-point fall. In the US, of course, the pre-market rates, they're currently little changed. But again, these are just early days yet. And the street is awaiting the inflation data. Nvidia, that plunged over 8% after its earnings came off. Nasdaq was down to a 4-month low. Mexico, Canada duties are going to be implemented come March 4th. And Bitcoin as well, that's down a good 25% from its all-time peak. So across the board, you are seeing a bit of a shake-off. And those BARB stocks, Nikunj, that we were talking about just yesterday, they are the ones which are seeing a little bit of skim off from the top.
So Aisha, you may call it subtle or you may call it, obvious. The most talked about market in the world and the most talked about asset in the world, which is crypto. The most talked about market in the world is the US market. The most talked about asset in the world is crypto. They both have started reversing. So there is definitely a risk-off moment in the US market. And the correction is not very steep, but the correction I think is evident as some of these so-called BARB stocks, they've corrected between 10 to 15% from their recent high, and Bitcoin is down 20%. Global volatility has gone up. Dollar is at 107. So the global setup is shaky. The global setup is not strong and supportive. I can quickly argue back, which is that, does that really matter? Which is that we have underperformed this year in a very stark manner despite global strength. So are we likely to latch on to this decline, or are we likely to remain independent of what is happening? My sense is that when a large market and when we see a global risk-off moment, you cannot ignore it beyond a point, which is that you will fall, you may fall less, but it is unlikely that we are likely to go against the trend. India has been a weak market where we are falling more, and we were falling when everything was going up, and in this global reversal, I think we are simply likely to move in the same direction. What may happen is that if the selling intensifies at some point in time, if the dollar index corrects, if crude prices they go down, that may act as a trigger point for Indian markets or emerging markets. But I don't think we are there yet. US markets have a long way before they can stop correcting. I think there's a long way in which before the US tech stocks will stabilize, or what will happen in the crypto world. So it's not very palatable, let me put it this way. Early morning, if you're having a cup of chai and coffee and you would say, okay, what is in for me? The US market is not going to be leaving a good aftertaste on your, it's not a very palatable kind of a global setup.
Yeah, and I think the bigger worry is if US falls, do we fall further or not? Because of the panic in our market. I mean, we've shed 3%. We've hit an 8-month low in just 28 days of Feb.
So Aisha, this market decline in percentage terms is not large. But in terms of the quantum, what has happened in the small and mid-cap stocks, I think it's quite meaningful. And Aisha, you've corrected without an event. Normally, when you see this kind of an event, it has happened when there was COVID, GFC crisis, 9/11, TMT meltdown. Those were all global events, and events have triggered large corrections. This time, you've gone because of your own weight, and not that the world.
The earnings, largely, one would say the earnings slow down, and that's what the market priced in because you gave it extremely lofty valuations till about a quarter back.
Yeah, so you've corrected because of fundamentals, or you've corrected because of valuations. You've not corrected because of a trigger.
Global event.
Exactly.
True.
And it's not that the global market or the global backdrop was poor in the same 5-month period. So the situation on ground, I think, is, I won't use the word scary, but it has been an eye-opener that when excesses in the market, they get created, they will be washed out. In lot of stocks now, the word bull market is over.
Yeah.
There is a universal acceptance that in the small and the mid cap stocks, the bear market has started. So the unfortunate bit for us is that you've corrected because of your own weight, you've corrected because of valuation reset and because of an earnings slowdown, and you've gone down without any event or without any global correction. Now, where do we go from here? Let's understand where do we go from here. My sense is that in a lot of large cap stocks now, we are nearing what could be called as a fundamental bottom, large cap stocks. You are not nearing what could be called as a time-wise correction, which is that this correction in large cap stocks may just linger around. Small and mid cap stocks, I think it's too early to still buy them. पहले large cap stocks को संभलने दो, फिर small cap की बात करेंगे. So you do not want to go and put your last dollar in averaging a small cap, buying a mid cap. Please avoid that. Having said that, I expect March to be much better than Feb if all goes well and if we don't see any problem in the world. We can discuss that. I think March should be better. But if something happens in US which is event driven or something like a massive correction, then all bets are off. But I'm hoping for a better March than Jan and Feb.
Just looking at, what are the triggers for March, and it clearly continues to be all about tariffs. So that clarity is something that not just India, but the world markets are going to be acting upon on. And of course, the impact of the RBI liquidity injection. You saw a big move come by in the entire NBFC pocket yesterday. Is that going to really continue when liquidity is injected into the system? A base effect, of course, is something that's going to kick in as well. Accelerated government spends, that's something that the street is also going to be watching out for. And I think one questions whether the Nifty is going to consecutively fall come March, which is tomorrow or Monday, 3rd March. Is it going to be a 6th consecutive month of decline? Are we hitting the bottom at any point in time? And is it now too early to buy SMIDs? I mean, too many questions that everyone is grappling with right now.
When markets fell for 4th month, everyone thought that after the 4th month, we will see some revival.
Yeah.
It didn't happen. 4 became 5. Could 5 become 6? It could. But there is a possibility and there is a probability. Is there a possibility? Of course, yes. In life, सब चीज़ की possibility होती है. But then, is there a probability? Probability is, how do you define probability? If you are having a fitness routine, if you're eating better, the chances of you falling ill are less. Now that is the possibility. So let's look at the possibility. So how do you define possibility? First is valuations. In large cap stocks, valuations are better. From these levels, you don't have to panic and there is no compulsion for value readjustment. Second, the government spending has to come back, which is what they're saying. So March government spending will be, it will be felt on the ground in construction, in cement. Those offtake numbers, I think, should be visible. High frequency data point like auto, they're not looking bad at all. So you would imagine that, things will start looking, better there. And then I would also say that there would be clarity in terms of tariff. See, something in terms of a global tariff clarity would emerge, Aisha, in the month of March, at least at the global level. And markets would have readjusted to that. So if I look at the probability, I think March should be a better one because a lot of stocks are oversold. Flows could stabilize. Global correction, if it comes in a small manner, it could lead to reversal in emerging markets. And again, nothing goes in straight line, just like markets don't go up in a straight line. For 5 months, you've gone on a straight line. The law of averages, I think, is supporting us. So I'm hoping for not a terrific March, but a better March. So for me, the operating word really is not that it's going to be a terrific comeback by the bulls, but I expect the bears right now really should take it very easy. It's too late to sell, and if you hold 2 large cap stocks, I think you may just be rewarded for your patience. You'll have to just stay there. It's like a test match. Pitch pe baithe raho. 2-3 maiden overs, protect your wicket. Watching a lot of cricket, that's why I'm saying it.
Really so. Okay, well, a new pitch and a new opening batsman for SEBI now. Tuhin Kanta Pandey is going to be taking over as the SEBI chief. Remember, Madhvipuri Butch's tenure ends March 1st, which is tomorrow, and he's been appointed as the 11th SEBI chairman today, of course, with effect from tomorrow. And what a track record, and what a sort of biopic we have here, because he served as the finance secretary, as the revenue secretary already. So he knows how the system works. He knows what perhaps it takes to be the market regulator.
Yeah, you've got like a seasoned all-rounder back.
Yeah, clearly.
Okay, so I think first is very clear that the government is very clear that, look, we would want a bureaucrat in a sense to really be the boss of SEBI. First. Second, you've got perhaps one of the most experienced and one of the most senior most bureaucrat to be part of SEBI. And what is seniority? Well, currently he's a finance secretary, and from North Block he will come to Mumbai, which is where the SEBI headquarters is. Then he, in a sense, before the finance secretary, was heading DIPAM. What was DIPAM? DIPAM was the Department of Disinvestment, where the only job given to DIPAM was to create value in PSU stocks or PSU companies, which I think in last 4 years post-COVID, DIPAM has done brilliantly. He was also part of a lot of disinvestments, took LIC public, a lot of OFOs. He, in a sense, ensured that the market disruption remained weak. So over the years, I mean, he's met merchant bankers, he understands the working of the market, he understands the working of the government. Now, if you get a private sector head as a SEBI boss, then they understand one part, which is that how markets function. If you get a bureaucrat who's got no market experience, then he understands how the government bureaucracy and the policy making does. Very few individuals in the system can perhaps claim that I know the market and I know the government bureaucracy and I come with experience and I'm coming from a positioning of power to something which is critical. So the fact that such a senior bureaucrat would be coming over, it clearly means that on a government standpoint, SEBI has to be fixed or something has to be changed, or big changes are coming. ये तो पक्की बात है.
If you like this video, then like, share and subscribe to ET Now.